Dr. Ryan Lemand, CEO, Neovision Wealth Management, is here with us. Dr. Ryan, thank you so much for joining us.
Thank you for having me.
Let me ask you a question that everybody is asking now, because there's a lot of drama happening in financial markets and especially around U.S. assets. Everybody is asking about the role of Bitcoin as a diversifier in a portfolio and how does it compare to the role of gold? What do you prefer as an asset class that reduces the volatility of the investment portfolio?
Thank you very much, May. Thank you for having me. I cannot compare them. I cannot put them in the same bucket. They are completely two different animals, in my opinion. So gold is the traditional precious metal asset that is used by central banks to back their currencies. Until we get to the point where central banks, they start using Bitcoin as a backup for their currency, we will still favor gold as a hedge, as a protection against inflation, as a protection against geopolitics. Bitcoin is still not there. Bitcoin has its part in a portfolio, but it's a completely different part than gold.
But as you're talking about central banks having it, we've had recently Mubadala, for example, here buying $400 million in Bitcoin, at least from an ETF perspective. And we've had numerous other central banks exploring having Bitcoin as part of their reserves. What do you think is the catalyst for having central banks have more Bitcoin on their balance sheet, or actually start having Bitcoin as part of their reserve assets?
In my opinion, it's RWA. Real world assets. The day Bitcoin starts having a utility, and other coins for that matter, whereby you can actually use it where it's tangible, where it can be used to purchase real world assets or back it up. Until then, I think we'll remain in the exploration phase. Also, you can see regulators are still exploring this. Just a few months ago, we had Mr. Gensler in the US, the chairman of the SEC, who literally destroyed the crypto markets in the US and virtual assets. So there's always political uncertainty that follows political drives that some countries have. So until that stabilizes, I don't think we're going to see it anytime soon.
So institutional investor appetite was a main factor and headline in 2024. To what extent do you expect more institutional inflows to crypto assets this year, and especially now that Trump is starting to change the landscape, at least the regulatory and the overall framework of crypto assets?
We're seeing it on both sides. So we're seeing institutions starting to accumulate virtual assets, and particularly Bitcoin. But we're seeing the other side as well. Just 4 or 5 days ago, I think, a very large whale placed a short position on Bitcoin of $322 million with a stop loss at $85,000 and then take profit at $65,000 and another one at $58,000. So when you start seeing both sides of the trades, this is when you start saying, this is an asset that is maturing. As long as you only see institutionals on one side and institutions not on the other side, it's not yet mature. And that's why we're seeing all of these big swings in Bitcoin. We need it to stabilize. The less volatility, the more adoption by institutionals.
Yeah, that was a hell of a short from that whale. I mean, how do you see the interaction that we're seeing between the price of Bitcoin and overall macro, M2? Like, what's your view on the overall outlook for Bitcoin, considering everything happening in the macro world?
So in the macro world, things are very tense, as you might have seen: tariffs, geopolitics, political uncertainty, etc. And here we see two generations. We see it from our own clients, actually, on the wealth management side. Traditional older ones, they move towards gold, less undervalued assets, Chinese stocks, Indian stocks, etc. But then on the younger side, no, we see them going towards Bitcoin, virtual assets. So we're seeing that transition happening from the older generation to the newer generation. So when you look at the newer generation, they don't want to worry about the hassle of storing gold in a storage box in Switzerland, etc. They just go on their app, click a few things, and they have their Bitcoin, which they see as a proxy to gold, if you will. So all of this uncertainty is pushing people towards these safer assets, if you will. Second, M2. M2 and Bitcoin prices have always been very much correlated, and at the moment we're seeing a spike in M2. So interest rates going down, so we're seeing money supply expanding a bit. So will Bitcoin prices follow, as we have seen over the past 10 years, I would say? That's the big question.
So a question about this particular idea. To what extent do you think that what we have seen during the past couple of sessions in the US market was a decline in NASDAQ, in tech sector, and that actually reflected on Bitcoin because there was some kind of correlation happening between the two? Do you expect this correlation to continue? Do you think that this is a factor that the investors should worry about?
Well, investors usually, when they have margin calls on their main assets, which is the Nasdaq in this case, what they do to cover their margins
they
is
liquidate other
exactly.
assets.
And we've seen this happen with gold and multiple others. This is what creates that correlation. But this correlation has a floor. So once the liquidation happens, you've covered your margins or you've closed your positions, then the correlation breaks down. So I do expect this correlation to break down sometime soon. If Nasdaq continues to drop, which we expect it to do, because we've seen the Treasury Secretary in the US, he said, a recession is coming. It is happening. So recession happening, that means overvalued stocks will continue dropping. So people will, instead of covering their margins, they'll close their positions. Once they close their positions, they don't need to sell Bitcoin anymore, right?
Yes.
Then they might invest more into Bitcoin. And this is, we might see Bitcoin go up again and the correlation becoming negative rather than positive.
And one last question, Ryan. Obviously, there's been a lot of talk about the change in the U.S. approach to Bitcoin and crypto more generally. To what extent do you think, with all the, I know you're quite negative on the U.S., but you think that the changes on the U.S. markets could, the change of the U.S. government approach to Bitcoin could maybe in a way save or give another boost to the industry in the US?
100%, absolutely. So the winner out of all of this mess that is happening, in my opinion, are virtual assets, Bitcoin and other coins, especially the ones that are linked to real world assets. So yes, absolutely. In all of this, yes, relatively negative on the US for many, many reasons, but the positive out of it is the departure of Mr. Gensler, more crypto-friendly in the administration. And let's not forget, when you own the second largest Bitcoin reserve in the world because of seizures, you want this asset to flourish. You don't want it to go down. So yes, I do see a second life or third or fourth life, whatever you want to call it, and Bitcoin in the US, absolutely.
Thank you so much, Dr. Ryan, for joining us in Crypto Weekly. That was Dr. Ryan Lemand, CEO of Neovision Wealth Management.
Are your children prepared for the future of money? Order Decoding Crypto with Henri and Hodler, the #1 new release kids book on Amazon.